A record 1,234 delegates from over 50 countries met in Vienna in January 2018 for the 23rd annual Euro-Money Central and Eastern European Forum. There was a pervading feeling of optimism that the euro crisis was over, a mood captured perfectly by Austrian Central Bank Governor Ewald Novotny, who once again addressed the conference with a keynote presentation.
Interest rates influenced by what has been called the redenomination risk. That means the risk that there might be a breakup of the eurozone. This has vanished. So there's a clear signal, markets know the euro is there to stay.
But, as Governor Novotny went on to say, the relatively benign conditions in the market did not disguise the ongoing need to improve systemic stability. It does, however, provide an opportunity to undertake much-needed reforms.
Because we have to be aware that we have very good and positive times just now. But we have to be aware that we have to use these good times to lay very stable foundations for the future. And therefore to have to de-risk our financing systems is an absolute priority for all of us. I think both for us as the central banks, but also of course for those active in commercial banks.
This theme of an ongoing need for reform was then picked up by several of the 6 ministers of finance who were then interviewed on stage.
So getting the economy out of a deep trouble, out of deep almost a collapse of the fiscal and the financial system to a position where we have a comfortable margin and we can pay back all debts, we can improve our ratings, and we can actually within that period revive economic growth, something that I would, I think, bravely call expansionary austerity, if you will.
Expansionary austerity?
Yes. Because in the midst of the fiscal consolidation, we managed to turn around negative growth rates into positive growth rates, despite the fact that the last year we revised the growth rate from 3% to 2% due to supply side.
The need to reduce fiscal deficits to a more sustainable level was picked up on by other ministers, including Minister Maric from Croatia.
Since I took position of the finance minister together with my team and obviously as a part of the government, we recognize that this is, I would say, one of the top priorities to change. We have been seeing quite, let's say, steady growth of public debt in the recession period, and we wanted not only to stabilize but already to start reducing the public debt. So in the 2 years, it came down roughly by around 7 percentage points of GDP.
Structural reforms to the financial system are considered an opportunity in Lithuania.
So what we decided that if we review our legislation, if we make our licensing process quick, if we allow non-banks to access central banks' money for transactions, if we create newcomers program, if we attract people working in blockchain industry, then we can become a center for fintech, not only in the region but in Europe.
After the ministers' interviews, there were a succession of panels addressing the key topics of the day, starting as ever with an overview of the region's macroeconomic conditions. Against a backdrop of strong growth in many countries and ongoing low interest rates, there was one obvious concern.
Technically speaking, of policy errors, I think it's the inflation risk that really matters. Inflation has been very benign for a very long time, and we don't see a big risk of inflation spiking up. However, especially this year, I see the risk that inflation might surprise to the upside, and that could lead to some reaction in government bond markets. I think, fundamentally, interest rates going up is a good thing for the world economy, for this region.
The expected increase in interest rates was also unsurprisingly welcomed on the investor panel.
It's good for investment, good for investors to have less funny money around. That doesn't mean the funny money is disappearing quickly. I think it's going to disappear in a managed and pretty well telegraphed manner. So there's still things to be done. But if volatility is going to creep up this year, it's it's probably the second half of the year. And I think that's good for risk markets.
One of the networking highlights of the conference was the traditional cocktail reception, once again kindly hosted by Raiffeisen. But it wasn't all positive. We asked delegates what their biggest concerns are for 2018.
I think if bond yields did go up another 0.5%, doesn't sound like a lot, but that could tip the balance, and people will say, well, hang on a minute, I want to own some bonds now. So I'm getting, let's say 3% in the US, and suddenly you think, well, with equities being expensive, that move could dent equities. So that to me is a worry.
We also asked about the effect of the end of the ECB's quantitative easing program.
Long-term financial stability might be the winner. The loser clearly is the fixed income asset class, and more specifically the government bonds. I believe that as the ECB tapers, that tapering will focus primarily on government bonds, and that asset class will suffer.
I think the winners are going to be the countries and the companies that are less levered, that are less geared, and the losers are going to be those that have a greater degree of gearing. So I think the big winner in an Eastern European context, in a broader Eastern European context, is going to be Russia, because the Russian state generally has very little debt. The Russian economy as a whole has very little debt. I think the big loser in the medium to longer term could be some of the Central and Eastern European economies which have higher levels of debt, which are relying on wafer-thin spreads to finance themselves. And I think those economies could be more vulnerable, not in the short term because economic growth is relatively strong, but longer term as the cycle matures.
Thank you to all our sponsors, speakers and delegates for making the 2018 Forum a great success. We look forward to seeing you again next year.